Hey everyone, welcome back to the Daily Gold Podcast. Today we're speaking with Pete Doherty. He's the president and CEO of Argonaut Gold. Pete, it's very kind of you to join us on short notice. I know it's been a very busy week for you and your time is limited, so let me get right to the first question. Before we talk about the big news of the acquisition, let's talk about Q3 production numbers. Argonaut produced 31,000 ounces of gold, which I believe is a quarterly record and a substantial increase over the previous record. Pete, can this rate of production be sustained? What are you expecting for Q4 in 2013?
Well, thank you, Jordan, and thank you to your listeners for taking the time this evening. I would like to start with thanking the people who really delivered the Q3 production, and that is our employees at the sites. They have done a tremendous job, not only delivering quarter-over-quarter improvements, but clearly setting record pace here during the third quarter of 2012. As we look to the answers that brought us that record production, we saw substantial growth at both the La Colorada and the El Castillo projects. El Castillo was helped along this way by a higher than normal average grade for the mine of over 0.4 ounces per ton. While that is quite a feat within itself, as we look towards the fourth quarter in the future, the average life of mine grade here at this project is around 0.36 grams per ton. So we see production dropping off slightly here in the fourth quarter. We put out production estimates as to where we thought the corporation may end up here coming forward into the fourth quarter. However, as we look into next year, I know many of our listeners have focused on where are we taking this project in the future, and we had talked about running this project to a point where we could see production growing to a rate substantially greater than where we are today. So in the future, I believe that we'll see production climb. However, in the fourth quarter, we might see a little pullback from where we were during this quarter, somewhere in the neighborhood of 23 to 24,000 ounces at El Castillo. When we start to focus at La Colorada, during the third quarter, we expected a slight pullback in production to around 3,000 ounces to be produced. We were very fortunate in not having to move the crusher and take that shortfall during the third quarter. However, we anticipate making that correction in production during the fourth quarter and see production for the fourth quarter in that 3,000 to 4,000 ounce range. That still sets the company on a total run rate for the full year of well into 100,000 ounces of gold, which is significant for the company, coming up from 72,000 ounces of gold produced over the last year, a significant improvement year over year. And we can see that production profile continue to grow as we move forward into 2013 and on to 2014 as the company continues to expand. So what I can say for your listeners is that we expect fourth quarter of 2012 to be somewhat in line with what we saw during this quarter, but a slight shortfall from El Castillo and La Colorada. But overall, year over year, a significant improvement, nearly up from 72,000 ounces up to nearly 100,000 ounces or slightly thereover.
Obviously, the big news this week was news of your acquisition of Prodigy Gold, who has a strong asset in the development stage. Pete, what attracted Argonaut to this asset, and how does it impact Argonaut's pipeline?
Jordan, as you described, this has been the focus of my efforts this week, getting out the Prodigy Gold information to disseminate that widely to the shareholder base of Argonaut Gold and to talk to the Prodigy Gold shareholders about what Argonaut Gold brings to the table. I think the thing that attracted us most about Prodigy is not much different than what we saw in Pediment Gold. I have likened all projects unto location, location, location. It is so important, whether you're talking real estate or you're talking mining operations, where the location sits. I have always likened our projects to be close to operating infrastructure, which helps in development of a project. When we start to look at this particular project, a nice jurisdiction, being in Canada, I can't think of a better place to be located to have an operating facility. Secondly, this is a past producing operation. That brings with it significant advantages. Right now, on the records and books for this for Ontario, the project Mangino is considered a dormant or an inactive mine. That allows for a rapid or easier permitting as we move forward. That doesn't mean it's going to be easy. It just means it's going to be easier and can take that time frame in order to permit a greenfields project and shorten it, because this is an already existing project. It's close to a nearby facility in the Island Mine that is being operated by Richmont, and it is close to a small town by the name of Dumerville, and also close to a larger town called Wawa in northern Ontario, roughly 40 kilometers away from that. There is water, there is power, there are roads and rail nearby. So this helps with this project. The other thing, after you get through the overall locational items of this project, the other thing that attracted us to this particular project is one of performance. If you look, nearly 2 years ago, this project sat in outer obscurity. Nobody really knew much about this project. Within 2 years, they have been able to increase this to a resource of roughly 2.2 million ounces of gold on the first round. And now with the latest performance put together, we're seeing this project at a 0.35 cutoff carry nearly 6.3 million ounces of gold, a significant improvement over time. But more importantly, besides a growing resource, we saw great flexibility within that resource. When we looked at the cutoff grades associated with calculating the overall resource, we see at a 0.35 grams per ton cutoff roughly 230 million tons of material at an average grade of 0.9 grams per ton, yielding 6.3 million ounces. If we change that cutoff grade to a much higher cutoff grade of 1 gram per ton, we see 55 million tons at 1.7 grams per ton average and over 3 million ounces of material. What's interesting about this particular project and very exciting is there's great flexibility. You don't need to look at a very large 6.3 million ounce deposit at 0.9 grams. But if you shrink that deposit to a smaller mineable deposit nearing towards a 1 gram or higher, you will see that you do not lose a significant portion of the ounces, but yet you increase the overall grade that you will process therein, reduction of capital that you'll need to process those tons, and reduction in the ounces that will be processed through, but yet a higher margin to be gained on those ounces as the grade nearly doubles from where it was at 0.9 grams per ton. So a significant amount of flexibility within that resource as well. And that's nice to have because it allows you to explore different alternatives. And from an Argonaut perspective, we're looking to right-size this project to an Argonaut type of project, something that fits in an Argonaut type of portfolio and return and risk reward premium that we're looking for on this type of project. So that's what really excites us about this project. It's early days, it's had significant growth, and there is great flexibility, and the past historical production leads to quicker and easier overall permitting down the road.
Now, Pete, the Mangino project is at least 3 years away from production. Is Argonaut going to look at other assets closer to production? How does this acquisition impact your ability to assess other potential additions to the company's portfolio?
Jordan and your listeners, I think in a mining company, we're always searching and on the look for the next project that we should be bringing into the portfolio. Whether that project is today or if it's 6 months or if it's 3 years down the road, we're always looking for projects that can be brought into the production pipeline. The interesting thing about the Mangino project is that right now the game plan outlined through the Prodigy side of things was to receive the permits, hopefully by the beginning of 2014, and get to a construction and production state by early 2016. Now, I don't know if that timeline still will hold together and will move forward, but that's quite an aggressive timeline, but one that dovetails quite nicely with that of the existing Argonaut portfolio. As you know, we have the San Antonio project, which we are currently permitting today. We are expanding the La Colorada and the El Castillo assets to grow that base for a larger production profile. Overall, when you look at our time frame and what we have laid out for our three projects, we would pretty much so be ramped up and completing construction somewhere in that late 2014, early 2015 timeframe, which really dovetails nicely into startup construction here on this project. So from one perspective, Magino dovetails in nicely with where the company is going with its own production profile. But secondly, we always need to look at projects and assess them for how they could fit into the Argonaut portfolio of assets and what we could do differently to create superior value and return out of those assets. So we'll continue to look at that. As far as where we are today, we're obviously in a transaction phase, and we need to roll through the end of that. We hope to have this transaction completed by the end of the year. So that kind of ties us up right now in looking and doing a lot of other things right now today. We need to focus our efforts on completing this transaction. In the future, we'll continue to look at other opportunities.
And how about we get a quick comment from you on the deal you made with Bravada Gold, who owns the past-producing Wind Mountain deposit, I believe it is. Maybe you could just discuss that for a minute, what the rationale behind that was.
Okay. As we have stated many times, our philosophy is to focus on a few key countries and states within the northern hemisphere here, up and down the Americas. And the U.S. has always been a place of interest, specifically Nevada. It tends to work for mining. It has a mining culture. It has a trained workforce, all the things that we need in order to be able to set ourselves up to have a successful experience. When we look at Wind Mountain, as you said, it was a past producer for Cypress Amex. They operated this project at a time when gold prices weren't quite what they are today and produced nearly 250,000 ounces of gold during their time of running this project. It was quite a successful project for the Amex company, Cypress Amex company. When we look at what they had processed in the old times, they were looking at roughly 0.55 grams per ton being processed. Today, they left behind many tons of material and ounces that run somewhere near a 0.4 to 0.3 grams per ton. Overall, there exists at this particular property roughly 500,000 ounces identified as inferred mineralization, indicated mineralization, and another 200,000 to 300,000 ounces of inferred mineralization. So a nice starting point to look at to see if we can build upon that is our goal and our aim with the owners of the project, Bravada Gold. It's interesting as you go through your career, you'll find that we work in a very small environment in this gold environment. The owners and the operators of the project of Wind Mountain used to be actually working for us during our days of FMC Gold. Actually, Joe Keesis was a geologist for us at FMC. And we really liked the experience that we had with Joe and his team early on and what they were able to accomplish. We see this project having a nice mineralization base to work from and then to grow from. So it's early days. We have a small commitment early on to see if we can find new mineralization and grow this project from where it stands today. So it's early days. It's a small entry point, but one that could grow and potentially turn into something for us. And that's what we like to see.
Okay, Pete, well, you've covered a lot of ground here, but before we close, is there anything else you want to mention?
I think that things are moving along for the company quite nicely. It was a tremendous third quarter. As we look at what happened in the cash balance, we saw a significant growth in the overall cash balance for the company, led by substantial sales for the quarter. Those were all due to operational changes that we made at the operations and significant results therein. As we look today, the company currently has no debt. We paid off over $6 million in debt during the third quarter and increased our cash balance from nearly $20 million to over $43 million at the end of the quarter. So we are well poised and well financed to carry forward our development efforts. As many of the listeners know, we have the original IPO warrants coming due at the end of the year. They have a strike price of $4.50 and will bring in nearly $110 million worth of additional capital to put into the treasury. You combine this with how the operations are performing today, the company will be well served with over $160 million in cash on the books at the end of the year. We combine that with closure of the transaction with Prodigy Gold, that will bring to the table another $60 million. So the company will be sitting on quite a substantial cash balance, enough that can carry forward all of our development projections at this point in time. That positions us quite nicely as we look towards the future. As we look at the San Antonio project, this has been an election year in Mexico. We expect that the new president will be taking office here in early December and appointing his new cabinet in early January. And we can then, in turn, start to have further discussions and have discussions about how this project might be moving forward, as we know that it is currently in a situation where we need to resolve a zoning issue at the particular project. And I think that's going to be important as we look at the new cabinet members coming in and changes within how the departments will run as we move to the future. Quite excited about that project, has a substantial return with it, and can make a significant impact in the community for the future employees and those who are currently employed by the company in the San Antonio region. So the future is looking quite bright for the company, with production growing at both of the projects, hitting record milestones at this point in time. We're excited about the addition of the Magino project and the other projects within Prodigy Gold, and look forward to what 2013 and the future will bring us.
Okay, Pete. Well, thanks so much for joining us today. I really appreciate it, and congratulations on all of Argonaut's success to this point, and we wish you all the best in the future.
Okay, again, thank you, Jordan, and thank you to all your listeners and supporters.